Some of the largest investment portfolios in the world are built using just two numbers, 60 and 40. Some of the most widely used portfolios in the world follow a very simple structure, 60/40ths. What does it mean? 60% in growth assets, 40% in stabilizing assets. Traditionally, 60% stocks, 40% bonds. Why this combination? Because stocks and bonds behave differently. Stocks can grow faster over long periods, but they can also experience significant volatility. Bonds usually grow more slowly, but often reduce the size of market swings. So when combined, the portfolio becomes more balanced, not too aggressive, not too conservative. Let's imagine a simple example. If markets grow strongly, stocks drive most of the growth. If markets become unstable, bonds may help reduce volatility. The goal is not to eliminate risk. Risk always exists. The goal is to manage risk, because risk influences behavior, and behavior influences long-term results. Why can this work? Because diversification can exist inside one instrument, not only across many instruments. Another advantage is clarity, fewer decisions, less complexity, less temptation to constantly change strategy, because too many options often lead to hesitation or emotional decisions. A simple structure can be easier to maintain consistently, and consistency matters more than complexity. But simple does not mean perfect. A portfolio that moves too aggressively may cause emotional decisions, changing strategy too often, selling during downturns, trying to predict markets, but a balanced allocation may feel easier to hold long-term, and consistency matters more than intensity. Another important point, 60/40ths is not a rule. It is a concept, a starting point, a framework. Some investors choose more aggressive allocations. For example, 80% growth assets, 20% stabilizing assets. Others prefer more stability. For example, 50% growth, 50% stabilizing assets. Different allocations reflect different risk tolerance, different time horizons, different personalities. Because good investing is not about copying numbers. It is about building a structure you understand and can follow consistently, because the best portfolio is the one you can hold through market changes. Good portfolios are built around structure, not predictions. Follow Grecia Capital for structured investing education.